Fund Supermart, your online gateway to unit trusts.
What is your outlook for the three REITs categories, commercial, residential, industrial in Asia Pacific, and which are you more positive on?
Okay, I think it's a fallacy to believe that there are only three categories in REITs. Okay, there are many categories, and these are your so-called common ones. Specifically, we are not too heavily weighted in these three categories. To be specific, in Japan, we are into hospitality and also accommodation, and they are doing really, really well. Number two, in Australia, it's more of childcare, healthcare, and non-discretionary spending, and a little bit of logistics. And in Singapore, it's more of healthcare, infrastructure, data centers like cloud technology. So that doesn't mean that your basic industrial, commercial offices will not come back into play. There are some values appearing, so yeah, we'll look at it again and we'll try to create value through those REITs category.
What are the key drivers and key risks of Asia Pacific equity?
I think it's common knowledge, and market volatility has already exhibited that. Number one is the Fed. They alluded that there'll be 4 hikes this year and 4 hikes next year. Frankly, I don't think the market can take it, and it's showing now. That's one. Number two, the second risk would be on China, how it balances itself from investment to consumption and services. That's a necessity, but it will take time to play itself out. So those are the key risks. The drivers would be on disruptive technology and services side. So if you go on clean technology, disruptive technology, services side like tourism, healthcare, while it might be a bit crowded, that's where you are making money now.
As you mentioned China slowdown just now, how is China's slowdown affecting your portfolio positioning for 2016?
Number one, we are very underweighted in China and Hong Kong, okay? And if we are weighted in China, Hong Kong, it's in the categories that I mentioned earlier in the question you asked us. And it's no different in the other country allocations. So we are also into services. Unfortunately, Apple came out to say that they have some overestimation and they're cutting back on their order production. And so you notice that the last 1 to 2 weeks, all the technology stocks have taken a little bit of a softening. And so really your sectors are limited and they are overcrowded trade, but I think you should stick to it for a little while longer and see whether value appears elsewhere. It's not easy. You need a lot of strong stomach for it and to play the momentum.
Are there any countries or sectors that you are bullish on within Asia Pacific, and why?
Let's play the relative game, because fund management is all about relative. Okay, we've been very comfortable with Indonesia for the last 3 months, and we remain so in terms of the policy that they have implemented, in terms of how Jokowi has managed to get more traction with regards to its cabinets and ministers. And so we will remain in Indonesia vis-a-vis the infrastructural play, and certain banking stocks are exhibiting certain values. We are turning a little bit more bullish on Philippines for very similar reason in terms of private and public equity, and also in terms of valuation appearing, and the earnings numbers are pretty strong and basically domestic driven, just like Indonesia. So you are not that impacted by the external factor. So you've got to look where there's either a service and tourism play coming up from China, like cosmetics or whatever, or you have to play the domestic demand angle. But specifically, you ask me just 2 countries, would be Philippines and Indonesia for the near term.
Are property prices a big factor in REITs valuation? And how would property prices move in 2016? What will be the impact on the sector itself?
The property prices are definitely important, but property prices alone, it's not the only determinant. You've got to look at the interest rates and demand and supply. I'll give you a very good example. In Singapore, if you have held on to office REITs, you would have lost easily 20, 30+% for the last 1 year. It's a question of supply and demand. So at that kind of prices, nobody is going to have any M&A, and you won't be able to make money because you've got to lock in your funding. Rates are going to go up and you'll be dragged down. So prices are important, but if they can get a decent cap rate and prices come down to a certain level, then I think there will be an angle to play. Just like in Australia, there are certain transactions done in the officer side, and if they strike it at those kind of yields, then you would be value accretive, and then you will make money. So at the end of the day, it's demand and supply, and also vis-a-vis the prices, like what you say. There are areas to look at for the time being, but not in the core areas which you've been asking me about. But values, like I said, are beginning to appear in the office sector in Singapore. Might be too soon, but you cannot take your eyes off the ball, put it this way. So you play the services side, like how I mentioned, but sooner or later you need to get back to some of these key basic areas. So prices is important vis-a-vis the funding costs.